This is Alan Bush with the Daily Financial Futures Forecast for Tuesday, April 7th. Starting out with the stock index futures, we are seeing prices higher today. First of all, gains yesterday were linked to better than expected economic news and the growing belief that the Fed will be delaying an increase in the Fed funds rate. Also, we had several Fed governors over the last couple of days basically saying the same thing, that the Fed may have to wait to raise interest rates. Also, we do have earnings season starting tomorrow with Alcoa reporting after the close. According to a Bloomberg survey, earnings at S&P 500 companies are likely to decline 5.8% in the first quarter. Now, normally that would be a very negative development, and however, we do have the historically low interest rates in place, so we continue to believe that any earnings weakness that we see and any weaker economic reports that come along, including the weak non-farm payrolls report on Friday, will be met with more accommodation in one form or another by the Federal Reserve, or at the minimum, a delay in the Fed funds rate increase. So even though earnings are likely to come under pressure this quarter and probably over the next couple of quarters, we continue to believe that the main trend is higher for stock index futures. Over in the foreign currencies, seeing the dollar index advancing this morning. Not a lot of news that would account for dollar strength and weakness in the euro currency. However, there are some concerns that Greece may or may not be able to repay a payment scheduled to be made this Thursday to the IMF. So that could be one of the reasons why we are seeing a little pressure in the euro currency this morning. Also in the Australian dollar, higher prices. This after the Reserve Bank of Australia at their meeting today refraining from lowering interest rates as most analysts had anticipated. And in the interest rate markets, seeing some gains at the long end of the curve. The short end steady to a little bit lower. Continue to believe that longer term that the 10 and 30-year issues will remain in a bull market, and that the Fed will be forced to delay a rate increase probably until 2016. So nothing really changing in our long-term view on the interest rate markets. The bull market remains intact from what we are seeing. So everybody have a good trading day. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.